We're taking a multiple account, limited risk strategy trade today with 3 different accounts, limiting our risk in each one of them, buying at different support levels in case the market does a liquidity sweep and hits Fibonacci zones and decides to reverse, which happens daily. So we were stopped out of our first trade with the simulator. I like to take the first trade on the simulator. Right here, we got in up here. You can see entry. Golden zone was down here. It came all the way down and swept that pivot, even that pivot, it looks like, and stopped me out of that trade. There's my stop loss right there. There's my entry. There's my stop loss. There was my target. Okay, so we stopped out of the simulator. Since it was in the golden zone and after the liquidity sweep, we entered in our second trade, though, which you see over here. It bounced in the golden zone after sweeping and sweeping, and now we are green on that. Hopefully it'll hit our target. Best that'll happen today with this scenario is that we'll break even and we'll look for another entry, because the first trade was a stop loss. Second trade was a target 1, unless I want to hold it for a target 2, which I'm still learning how to do. So that's where we're at today, this morning. In case you want to see the morning breakdown of what's actually happening here, let's look at it on, take notes, man. It's really, really helpful if you take notes. So we have our trade 1. We got the entry price. We got the stop loss price. That one failed with the simulator. And then we got trade 2, which we're in right now. We have our stop loss in place. And I don't know about a third, because the way the price is looking on the charts, I can't find a reasonable place to get back in if it keeps going down. So there may not be a third. It may just be, if it goes straight down and keeps going down, we'll have 2 losses back to back with these 2 accounts only. And we're limiting our risk to like $250 an account. One's a simulator and one's the PA Apex Past account, which I'm hoping to get a payout on it. And if we'll just take a small loss in both of those if it doesn't keep going up. So that's where we're at with it right now. So hopefully it'll keep going. Let's see. All right, hopefully it'll hit my target up there. That would be nice. That would be the break-in point. I think I would take my profit just because I want to get a big gulp and understand that my first trade went totally against me. And then the second trade, hopefully it'll get up to that target level. I'm really hoping it does. And then we can break even on today's idea, or I could take my trade a little early. This is something I'm working on and I'm really, really struggling with, and that is holding my trades for the big moves. And I really understand that if I can't do that, I'm going to be in trouble, and if I can do that, I'm going to be much more successful. It's kind of like the obstacle that's holding me back right now. So I really need to watch this in the video upload and hear it over and over, talk to myself about it, think and meditate about it, really, really understand and grow in courage, really, and strength to just hold the trade. Let your target get hit. And I've seen so many trades that got 2 and 3 times risk, and this is, I'm basically a break-even trader at this point. And if I could just get past this obstacle and hold my winners, I know that I will be able to pay my bills 100% and more. So that's the struggle right now. All right, I'm going to go to break even on it. I don't want to take a loss in my PA account, real money account. It almost hit the first target up there, and if it gets that close to first target, I'm going to break even. There's nothing like almost hitting your target and then having it come back and do a full stop loss hit on you. So that's just the way it'll be. Well, if it stops me out, we'll break even on the PA account, and we'll have had a daily loss limit on the simulator, and then we will probably switch to strategies and start doing some scalping instead of this wider risk limit strategy. But hopefully it'll go right on up there. Now, if it goes up after stopping me out, that will be the classic slap in the face that happens to every day trader, and you can't get mad about it. You can't get upset. You just have to really try to have patience. I want to get back in it, but I'd have to keep my stop below this pivot level right here, because that means I'll still have less than a full risk. But look how it's acting. it might be best for me to just turn it off for now and come back in about 10 minutes. So I'm going to end the live stream, and the plan, we'll keep watching as time goes on to see, you know, where it's going to bounce and what I should have done. And you always look back and go, you know, I could have done better, and this is what I should have done. And that's why I make these videos and study this. We have to stick to our plan, though. The question is, should I have went to break even or not? And I don't see, that's just optional. That's personal preference. I don't see anything wrong with that. I'm not going to enter a third trade because, well, let's look at a third trade possibility. I would have to be in that third trade somewhere down here if it kept going. I'd want it to sweep. Wouldn't it be broken? I think here's the 5-minute chart. If this pivot level keeps breaking, here's the Fibonacci for this entire move up. If it keeps going down, I'm not, yeah, it might sweep after these pivots down here, but to me, it will be trending down, and I'm not looking to go. Let's see the 15-minute chart. Yeah, the 200, once it gets below the 200, I'm not really interested in trying to go long at that point. I'm looking for it to reverse, give me some, it's just too much of a stop loss. Even if it is bullish, and even if it does break it, and even if it sweeps the yesterday's low and then bounces and comes back up, I can't trade down like that. So I'd have to wait for it to look bullish like it did up here. It looked bullish up here. When I first took my first trade, it was above the 100 moving average, and it was bullish. So I feel like 2 good tries is okay. We broke even on the second one. I'm perfectly fine with that now. I'm glad I didn't get back in it. I'm very curious to see if it's going to hit my stop loss on the second one, and that will make me feel a whole lot better, because then I'll feel justified. So let's mark it. Stopped out. If I would have moved my stop to, I got 2 things I'm curious about. If I would have moved my stop under this pivot level, how would I have done? Could I get back in it if it keeps coming down here for a second try on trade 2? Because I did stop out for break even. I haven't lost anything on it. And if it keeps going near this level, it might be worth re-entering at a much, much deeper price to the downside. So that's the only other way I can think about playing this. If it breaks this stop loss area, goes below the 200, I'm not interested in getting into a third trade. Would I be interested in getting back into this trade at a lower price? Yeah, actually I would be. Is it going to double bottom right here and prove support? If I really wanted to figure out how to get back in this trade, I could use this level right here as my stop loss now, and still have less than a 1-hour risk on the total trade. 150. I should have tried to get it. I should have played my, yeah, you know what I should have done? I should have played that strategy where I like to have a low risk limit when it tapped into that area, buy as it goes back up, stop loss right under there. That would have been all the risk I had on the trade. So it's a great learning lesson for me right here. If I break even, look for the pivot sweep level to play my liquidity sweep or support level trades. I really want to buy this.
Order filled. Order submitted. Order filled. Order canceled.
Okay, so the second trade was stopped out for break even. I had 2 chances to get back in with scalping. Both of those, well, the first one would have been successful down here at the pivot level. If I would have got in down here, I would have had 2 or 3 return. I didn't get that. But when I saw this candle close strong after coming into the golden zone, I decided to go long on this green candle here, and it went all the way up here, probably $40. I immediately put my stop on break even, and it came down and stopped me out. There's a scalping opportunity right here. I don't like it necessarily. It's not a plus setup, because you can see it's trending down on both time charts. If this was bullish and it was over here coming down into it, better. But now it's dropped below. And the 20's under the 50. If the 20's under the 50, that's I gotta wait. That's my exponentially large time. That's my large trading time chart. If the large trading time chart is going down, then I'm not gonna try to go long on the smaller time chart. So I'd have to wait for price to get back up over the moving averages, perhaps over the top, over here somewhere, and then give me a Fibonacci pullback. And then I could try, I'm not going to do the 250 risk anymore. I've already tried it. Now it's all about scalping for the rest of the day, taking small risk. I'm talking about like 5 ticks. So yeah, I'm switching strategies now, and it's could be. See, I mean, look at this 5-minute chart up here. That's all under the moving averages. Everything's under the 200 on the 5-minute. That's the higher time charts that I need to pay attention to. When I first started this trade this morning, everything was up here. I thought it was going to break out, but it didn't. Stopped out on the first trade. Second trade almost hit first target, came all the way down, broke even on the second trade. Tried to scalp, broke even on that, and that's what we did today. That's where we're at so far. 15-minute is looking difficult. You know, I was up here when I took those first trade when I developed my idea. The price was up here. Now it's down here. So if it continues to go down, we'll be looking to short it, but I'll be using scalping techniques, and I won't be doing a $250 risk limit on it. I don't think I will. I think I like to try that. I like to try that if the opportunity presents itself when I come look at the charts. If I see structure, if I see the direction clearly, if I clearly see the direction and I clearly see support levels, my first trade is the 250 risk limit with 3 accounts. After that, it's a matter of scalping for the rest of the day. And if this keeps trending down, we'll be looking for, look at this, clearly Fibonacci is working on the way down here. There's the golden zone. It worked here. Golly, look, it worked here, 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 50%, 50%, 50%. Now I just need this chart over here to continue to go down and break down, and then I will have more confidence to take that short. Although I'm trying to learn, you know, maybe I got 4 different, let me see. Once the 20 is under the 50, and it is, and the momentum lines are under the 20. So we got 4 moving averages going in the same direction down. If it breaks this Fibonacci level, then I could look for the next trade to be a Fibonacci short on my lower time chart. So that's what I'm waiting for. I'll be waiting for it to break this level here. Let me save this. Did I save this picture? Stopped out of trade 2. Trade 2 closed for break even. Yeah, I saved it. So I don't need this anymore. Let's get rid of this and this and this. Let's clean it up for some scalping. Clean it up for some scalping. You don't need any of this. I've already got pictures of everything. All right, so the plan is to watch the 15-minute and the 5-minute continue to develop down up here. If it continues to develop down, I'll use my exponential charts, my 1000 and my 100, to give me the pinpoint entries that I'm looking for. I'm going to have to use a different, I don't know what account I want to use. It's got a lot to prove before I go long, because we still see the potential here. It's bouncing off of the Fibonacci golden zone 2 times. And my option for my second trade, instead of breaking even, which is what happened, I was thinking about putting my stop loss under this pivot. I triggered in the second trade here with my real money account. It kept going, and then it reversed. It went up $200, and I moved my stop to break even, but I was thinking about moving my stop to this pivot, which would have cut my risk in half. Instead, I went to break even and got stopped out for break even. So that's what happened. And I don't think any way's right or wrong, because it could have easily kept coming down and almost did stop me out at that pivot level. So it's just a matter of getting lucky, really. There's a lot of luck in day trading, a lot of grace from God, if you will. Yeah, I would want it to break above the trend line, and then retest it with Fibonacci 50% pullback, and then I will take the trade. That's the only way I can go along on this. Otherwise, it's too early. Nothing to do but wait patiently. May not get another trade today. I already know what my plan is for the long side, and I know what my plan is for the downside. It's going to have to break these levels. Then we'll look for Fibonacci entries, moving average entries, trend line breaks even to the downside. All that's viable and works great. What's the other markets doing? I don't know. I'm just fixated on gold. I mean, look at this thing go. Beautiful baby. Let's see what it's doing. This is the NQ. Man, why am I not trading the NQ? Well, let's plan it out here. Let's look at what I would have done. What I would have done. And I can't watch too many markets and have that kind of brain power on. It's just too much analysis to be jumping around like that for me personally. Let's look at here. When the market open. Let me set my alarms on the other one. I don't want to miss anything, so we're going to put an alarm on for both directions. Okay, so 9:30 this morning. Where's the opening bell? Okay, wow. So it opened and went straight down. Man, where's 9:30 at? That's too. Let's go with 500 tick. Get this thing. I will go with 1,000 tick, which is. $9.30 right here. Okay, so as soon as the bell opened, right here. But I would have to, okay, I can't just look at that. I'd have to have a reason for my direction. I can't just go, yeah, on a lower time chart. Okay, that's where the bell opened up right there. Day chart. You have to have the day chart. So there's the high of the day. There's the close of the day. You have to see that. So it was already over the high of the day. Price was already over. Here's your entry point. This is what I would have done. Oh, this is a why is it that you see perfect setups on charts and you're like, this is exactly what I would have done? It sweeps the high. I might have tried that and got stopped out. But once it closes back above, I would have looked at that strong candle there, these pintails, this pintail. What that is 50% in those pintails. All of these pintails are right at the 50% level from this bottom. Take the breakout. How much is my risk if I would have just simply took the breakout and used the bottom? $40 risk. And look at that move. 120 with 3R. So that's how I would have played that. That is my strategy. That's what I like to do. I've used highs and lows and closes of the previous day. That's why you always see those marked out on my charts. Always the high, the low, and the close of the previous day. That great opportunities on that. Man. And in the overnight, trading the overnight, did something right here at the close. Look at what it did at the close of yesterday. Of course, that's like, what is it, 2 in the morning? 3 in the morning? I'm not up at 4 in the morning. But look at that's the close of the previous day. Excellent. That's one of my favorite ways to trade. So let's go to 2,000 tick because this thing is really moving. Open. This is the high of previous day. And the entry could have even been, once it breaks out over the high of the previous day, look for the Fibonacci level right here. So let's see how much this is. Boom. Look at that. Right above previous day's high, right in the golden zone. You could do a trend line break or just buy it on the green candle. If I would have bought on that first green candle and I might have been wicked out of the first try, and then I would have tried it again, give it 2 tries. Or maybe I should have been smart, and if I did get in, put my stop below the level of previous day's high. This is the bounce for the previous day. It already did that, so it doesn't need to do it again. I'm just thinking of all the different angles of what could happen here. Thinking of getting stopped out, thinking of what could have happened, what would I have done, how many times would I try, where would my risk be, where would my entry be. This is what becoming better and better is all about. This is what's important, not even really taking trades. This is back testing. This is analysis. This is studying the charts. This is what hours and hours and hours and hours of just observation and analysis will do. And I'm going to save this. All right, it's breaking above now on the gold. I'm almost on break even on the other one. I should just go to break even on it so I don't have to watch both of them. All right, we're on break even on the MNQ trade, and we're watching gold break the trend line that we said we have to have. And it's looking more and more like I should have just kept my stop under that pivot level that was created in the golden zone.
Order filled.
All right, we hit target. Yeah! We hit our target on trade, MNQ scalping trade. Good. Right here, we hit target. Up towards that trend line up there, 1 to 1. If that would have bounced off the trend line into the golden zone and gave me a pintail, I would have used that pintail as my stop loss.